You know it's really September when Joseph Carlson is making videos about the stock market crashing and your portfolio is going down 2% every day. But for us long-term investors here, whenever the stock market turns red and we have a little bit of cash stored up, I'm licking my lips at any opportunity. So today, I'm going to be talking about a few companies that have been on a bit of a dip recently and that I've been looking to add my portfolio or have been talked about a lot in the investing community. And 75% of you guys that are here watching this video aren't subscribed to the channel yet. On this channel, I promote real man's investing and actually looking at businesses, so if that intrigues you, it'd mean a lot if you could subscribe. Also, if you want to go the extra mile, become a channel member, get access to exclusive episodes, perks, and so much more stuff. And with all that out of the way, roll the intro.
Hello, I like money.
During a time like this in the stock market, it is very easy to become discouraged by just seeing your stocks go down. One day, you could be all optimistic about a company, and then next, it's down 3% and you're worrying about the world. This is a case only if you make it the case. When you invest, you need to become numb whenever a stock goes up or when it goes down. You need to have true emotion when you see a company's free cash flow consistently go up and be happy then. These are the times that as an investor where you're really made, and this is a time where you have companies that you've done your research on, you have your investment thesis on, that it's a potential time to load up on. So, here are a few companies that I'm looking at on this dip that we've been having recently. And of course, guys, before I talk about some of the buys in here, if you want to see what I'm buying, when I'm buying, and basically like in real time, and you don't want to wait every month for the portfolio updates, join the Discord link in the description. I post all my buys in real time there every day. As many of you guys know, for the last 2 months, basically, I've been pretty much storing cash and being way more conservative with my buys, in kind of preparation that there could be a potential dip like this coming soon, as historically, in my time frame of investing, it seems like every time September, October, November hits, for me personally, that's just when I have less amount of cash, I don't have as much to spend on stocks, and there's always a dip that I end up missing. So this winter, I'm ready for any dips. Alright, the first company that I've been looking at on this little dip recently has been Starbucks, of course, stock ticker SBUX. Starbucks is an amazing company. Today, they actually just announced a dividend hike of 7.5%, proving my investment thesis right once again. They're a great dividend growth company. They've been ranging from that 7.5% to 10% range annually, which is amazing dividend growth. They also perform share buybacks too. I think Starbucks, when it's fully valued, I think it's 120, 130 price range is a fair company, but there has been some speculation about China as of recently, which has been a bit of an issue for them. Now, I recently made a Starbucks full analysis video. Go check that out, where I talk a lot more in depth about the company itself. Highly recommend it if you want to learn more about that, and I think it's a really high quality video that I put together, and it's not that long. But overall, I really do like Starbucks as a company. They have debt, but I think they can easily pay that off if we were to go into some recession, their tough economic time. Overall, I believe they have great pricing power as well. Anytime you could charge $5 for a drink and people consistently come back and buy it, you're doing something right. I go to Starbucks a lot, and it's always packed. They have amazing store locations, and it's always packed. There's so much demand. I think right now is a good time to load up on Starbucks. I like it, again, as I mentioned, I think fair price for it intrinsically with China, but it's been a little inconsistent. I think 120, 130 is fair price, and I think the 90s is solid, and I think the 80s is a steal. I've been slowly adding to my Starbucks position in the 95, 93 range, and I'd like it where it's at right now, and I'd like to add more if it continues to dip. Starbucks, I think if we went into a recession, it wouldn't be the greatest company to own, but I think all companies will be impacted around the recession, and if you're in my time horizon, I plan to invest for a very long time, and I think a recession would be an amazing buying opportunity for Starbucks. Would they cut or suspend the dividend? I don't know, truthfully. In 2020, they didn't. So right now with Starbucks, I'm slowly adding. I like it in the 90s for sure, and if it continues to dip, I'll definitely add more. Alright, the next one you guys already know I had to talk about, which is of course Target, stock ticker TGT. Target's been, it's a horrible ride recently, I'll be completely honest, guys. It seems like every day that I check the stock, it's down 2 or 3%. It just seems like that's a never-ending dip with this company, but at the same time, I need to stay true to my fundamentals and investment thesis on it. Today, it's trading at $114, and I've been slowly adding this week. Basically, my investment thesis on Target is that over the long run, 30, 40, 50 years, where I plan to hold this stock, I believe it will benefit along with the American economy, and I overall think it's a very cyclical business, and now is the time you want to be buying. Right now, not a lot of people want to be touching this company, whether it be the political drama that they got themselves in, the fact we're in a higher interest rate environment, or the fact that in 2022, Target didn't produce any free cash flow. So far this year, they're producing free cash flow, albeit at a slower rate. Let's keep in mind during the 2021 bubble when everybody wanted to be part of the stock when it was trading at $250 per share. It's crazy that just in 1 year the stock can fall 50% and everybody's investment thesis and sentiment on the company can change that quick. I believe the big change in this was the systematic issues that they were dealing with last year, last May, June, July area. During C19, they had a crazy spike in earnings, as you guys could see in the earnings per share, and crazy earnings, which led to them increasing their dividend by 20%, and everybody wanted to be part of the company. But in a year and a half, everything has changed for them, it seems. Target has paid a solid growing dividend for over 50 years, and their last hike was 0.7%, which was much lower than others expected, as they had previously hiked at 20%. I think a correction was needed for Target when it was trading in the 250s, but I don't think it warrants this type of sell-off. Target, I believe personally, intrinsically, has a fair value of $150 to $170 right now, and I believe I'm securing a very solid yield on cost at the moment. I think it's noteworthy to mention that I don't think Target is the best company in the world, but I believe it's a solid company nonetheless, and I think at these prices over the long term, I'm going to get a really good return. So with Target, everybody's telling me to sell out of it right now. It feels like nobody else is buying this company except me, and everybody's selling out of it. Me personally, though, I'm keeping my investment thesis at the top. Nothing fundamentally has really changed for me over the couple of years that I've owned this company, and I plan to hold this stock for a long time. 30, 40, 50 years, I think I still get a really solid return at these prices, and I'll continue to buy on any dips. This is one that I'm being more conservative with my buying in, as I could see it falling more potentially as it has already, so I'm being a little more conservative, but I am averaging down. Next, we have one of the most iconic brands in the world, which is, of course, Nike, stock ticker NKE. I've talked about how much I love Nike as a business itself, and it's been on a bit of a dip recently. I've owned Nike in my portfolio for a while now, but haven't got the chance to average down, as I bought it at $140 and never found another fair price to add to. Nike's traded down to the $90 range over the last couple of weeks over concerns with theft with other retailers and other potential issues that they could be seeing in the future. With that said, though, I feel out of all the companies that I'm talking about today, Nike's probably the strongest financially. They have amazing free cash flow growth, amazing earnings growth as well. They also buy back shares and have an aggressively growing dividend. I think Nike's also the most premium valued company that I talk about today as well, so that's another thing to keep in mind. But I do think at these prices, Nike is becoming attractive for me to average into. Nike is definitely an amazing company, but there are valuation concerns from a lot of investors, as a lot of people do have a fair value on this company at $50 to $60 per share. But obviously it's trading at a premium. Nike is one of the only companies in the world that can have a $20 shoe and put a Nike logo on it and sell it for $500 and have it sell out. It's that strong of a brand and that strong of a company, and it's been reflected in their free cash flows with that. Nike's also a really small position in my portfolio, and I think now's a good time to potentially build it up. I bought $25 worth of Nike, and you'll have to see in my portfolio update in a few weeks if I continue to add. Currently, they're trading at a pretty historically high dividend yield right now of 1.5%. So as Nike continues to dip, it's going to be one of those companies I'm going to be really watching, and if it hits into the 80s, I could aggressively buy some more. Next, we have the railway giant Union Pacific, stock ticker UNP, and this is a company that's been trading up recently, but has been on a bit of a decline as well. It was averaging in the 200 and 190s range until Lance Fritz and he resigned as CEO, and they appointed new CEO Jim Vena to be their CEO, who was nominated by an investors group to be the next CEO based on his previous performance, and investors were very bullish on this potential growth for Union Pacific going into the future. Keep in mind, I thought Lance Fritz's performance was actually pretty solid when it came to their free cash flow and financial growth rates, as you guys can see in the EPS growth they've had. They're a very strong company financially with Fritz, and I think it's crazy that they have even more growth potential. I've been slowly adding to my UNP position too on this dip in the $210 to $200 range. I think that's a solid price to add to. I think railways are an amazing industry to buy into as well. I think it's very monopolistic, high barrier to entry and hard to compete with, and very strong company financially in UNP, which I want to make a core position of my portfolio. So right now, UNP's been kind of dipping into fair value territory for me. I like in the $210, $200 range, and as I mentioned, I'll definitely consider averaging down. It's going to be crazy, and it's going to be really interesting to see. And Jim Vena really has a crazy effect on the company's earnings itself, as their free cash flow growth has been solid over the last couple of years. They pay a solid and consistently growing dividend as well, and also have bought back shares historically. Right now they're trading at a PE ratio of 19.31. So UNP is another sneaky one that I'll be watching, definitely to consider averaging slowly into my portfolio. Those are a few of the companies that have been on a dip recently that I've been looking to add or have added to slightly in my portfolio. There are a few other companies that I haven't mentioned in the video, such as Disney and UPS, that have been on sizable dips that I've also been looking at. Now I want to talk about buying the dip fundamentals. This is a bit of a segment here of, my general principles and rules for me now at this stage of my investing journey. Whenever there's a big dip like this, when we haven't really seen one in a while. So obviously, I kind of anticipated this happening as I did build up a sizable cash position in my portfolio. Alright, first off, big thing for me is not to get trigger happy. It is very easy to blow your cash and go through all your cash very quick. When you see all these dips, you get really excited when you see companies that usually aren't on sale that you've been looking to add to for a long time. But it's important not to get trigger happy. I have been a little aggressive with my buying this week, but I still do have a sizable amount of cash that I have left to spend. So it's just not important to go through your cash all in one week. You can't properly time the dip, so you got to kind of average your buying out. But I did aggressively buy throughout the week, so next week we'll have to see, kind of, just wait out and see how it plays out. And nothing is predictable in the stock market, guys. Microsoft could crash 10% for all I know, and it would suck not to have any cash to capitalize on that dip. So it's always important to keep a cash balance, no matter how much it is, depending on your portfolio size. I think 5 to 10% range is solid for most people. Next principle is not to get discouraged when companies go down. It is very discouraging to see companies that you've been buying the dip already on going on another dip. For example, for me right now, it's pretty discouraging looking at companies like Target and Realty Income that have been on a crazy dip recently, and just not very optimistic about buying anymore, as you'll just think it's going to go down. But it's important to keep in mind the long-term frame of things. You're investing in these companies for 30, 40 years, and if you look at the long-term charts, these are tiny blips. This goes the other way too when stocks go up. It's not to get crazy and get encouraged as well whenever stocks go up and just buy companies at crazy prices. So we got to always keep in mind to be conservative and rational, which gets us into our next point, which is to be conservative and rational with your buying. Be rational and conservative with your buying, guys. As I kind of mentioned earlier, don't blow through all your cash in one position or in one day. Always assume there's going to be another dip to the dip you're buying. Also, keep an eye on your cash supply. That does kind of rhyme, guys. Keep an eye on your cash supply. You got to keep in mind also your personal income as well. Let's say 1 month, you're going to have a lot more cash, but the next couple months you might be a little low on cash. Be smart with your cash, guys. Be smart with how much income you're getting. And just kind of spread it out. Don't buy all your stuff in 1 month. And lastly, I'm going to put this out here. This isn't a fundamental, but I did want to talk about it potentially. Is me potentially buying VU or SPY, one of the general broad market index funds. It's a potential, guys. If we go on a crazy dip in the market, there's a potential that I could buy and dollar cost average into that. But I do see a lot of opportunities with my cash right now before I would go crazy into that. So it's another thing I want to present. If you made it to this part of the video, I really do appreciate it. If you haven't already, make sure to subscribe, turn on post notifications. I appreciate you making it this far in the first place. Also, I am a little bit sick, so if my voice sounds a little off, that's why. But you guys know I had to come in clutch with this video for you guys. If you haven't already, make sure to become a channel member. If you want to go the extra mile, help support the channel, get exclusive episodes, and you support what's going on here overall. I think there's some really good valuable perks as well. So thank you all for the support, and of course, do dividend stocks, not drugs. Have a good one.